Hello, traders, and welcome back to Inside Trading. I'm your host, Joe White, and today we are covering financial news for the week of February 16th through the 20th. So, like and subscribe, and we will get down to brass tacks. This week, prediction markets were in the news. On Tuesday, a judge denied requests to block Nevada from taking civil action against companies involved in prediction markets. Nevada regulators claim that these companies are offering people a way to legally bet on sports through prediction market contracts. Others have argued that prediction markets are susceptible to insider trading and also allow underage minors to illegally gamble. Kalshi and other companies argue that they are merely a financial exchange, therefore should be regulated by the Commodity Futures Trading Commission. CFTC Chair Mike Selig said Tuesday that the Commission is filing a friend of the court brief in cases where American prediction markets have been hit with an onslaught of state-led legislation. Selig also stated that the CFTC will defend its exclusive jurisdiction over these derivative markets. Selig made a statement saying, "Those who seek to challenge our authority in this space, let me be clear, we will see you in court." The prediction market industry poses an increasing threat to already established sportsbooks. Several have chosen to embrace this trend and launch their own prediction markets, including DraftKings, FanDuel, and Fanatics. In other news, on Tuesday, Warner Bros. Said it will reopen talks with Paramount under a 7-day waiver granted by Netflix to explore deficiencies in Paramount's offer to buy Warner Bros. Paramount launched a hostile tender offer straight to Warner Bros. Shareholders at $30 per share after losing out to Netflix in a bidding war. Netflix has provided Warner Bros. A limited waiver under the terms of Warner Bros. Merger agreement with Netflix, permitting Warner Bros. To engage in discussions with Paramount for a 7-day period ending on February 23, 2026, in order to seek clarity for Warner Bros. Stockholders and provide Paramount the ability to make its best and final offer. The story of Netflix and Paramount is a David and Goliath story. 20 years ago, Netflix was the underdog and Paramount led the film and movie industry. Today, those roles have been reversed. Paramount has a market cap of just under $12 billion, and Netflix is sitting at a market cap of over $330 billion. To me, Netflix is starting to look like a great opportunity for a long-term investment. My thesis for investing in Netflix has two parts. The first part is Netflix has built up over 20 years of data covering what its customers have been watching. I believe this data is influencing Netflix's decision to buy Warner Bros. I firmly believe that Netflix knows exactly what it is buying and wouldn't be acquiring Warner Bros. If it didn't believe that it was getting the better end of the deal. The second part of my thesis is that as developing countries grow, the internet will become more available, thereby increasing streaming services' potential customer base. Because of this growth and Netflix's popularity in markets outside the US, I believe Netflix will be just fine if the Warner Brother deal doesn't go through. Even though Netflix is looking more and more attractive, I will not be counting my chickens before they hatch. I'm currently waiting for news of an inked deal before I buy. On Wednesday, NVIDIA announced a multi-year agreement to supply Meta with millions of artificial intelligence chips and central processing units. Meta will use millions of NVIDIA chips in its artificial intelligence data centers, including NVIDIA's new standalone CPUs and next-generation Vera Rubin systems. Meta CEO Mark Zuckerberg said in a statement that the expanded partnership continues his company's push to deliver personal superintelligence to everyone in the world, a vision he announced last year. One thing I don't hear anyone talking about when it comes to Meta's AI is the theory that the metaverse is just one large world model for training its AI, compared to other companies who are scaling large language models. Is the metaverse a failure, or is it the future of AI? Drop your thoughts in the comments below. Walmart, which is a barometer for consumer spending, posted quarterly earnings on Thursday morning that slightly beat Wall Street's estimates. This report gave a readout on the key holiday shopping season in its first report under new CEO John Furner. The retailer, whose market cap recently eclipsed $1 trillion for the first time, reported adjusted earnings per share of 74 cents. That was a touch higher than Wall Street's estimates of 73 cents per share. For fiscal year 2026, Walmart posted results slightly above estimates. Revenue came in just under $716 billion and was in line with estimates at $713 billion. Adjusted earnings per share came in at $2.64, which was 1 cent higher than expected. Walmart stock is up more than 9% year to date. On Wednesday, the Fed released minutes of last month's meeting. The Fed minutes reveal a divided Fed as inflation remains over 2%. Federal Reserve officials want to see inflation fall further before they will support additional interest rate cuts this year, particularly if the job market continues to stabilize. In geopolitical news this week, Brent crude was up around 5% on news of a possible conflict between the United States and Iran. An American military buildup over the past month means the U.S. now has an expansive naval and air presence across the Middle East. The size of the U.S. force suggests the military would be capable of carrying out a bombing campaign that could last weeks or even longer. Some analysts are predicting the price of oil could go up to $90 a barrel and suggest that prices could climb even higher if the U.S. were to place boots on the ground. On Thursday, the Commerce Department released a report stating that in 2025, the U.S. had a $901.5 billion deficit, down slightly from 2024, but only by 0.2%, or $2.1 billion. The 2025 total was slightly less than the record $923.7 billion deficit in 2022. In related news, on Friday, the U.S. Supreme Court ruled that President Donald Trump violated federal law by single-handedly raising U.S. tariffs across the world. The Supreme Court voted 6-3 that the president's tariffs did not coincide with the law. In Friday's decision, Justice Brett Kavanaugh detailed Section 232 of the Trade Expansion Act of 1962 as a way the president could circumvent Friday's decision. The Supreme Court made no comments on the over $130 billion in tariffs that have already been collected. Later on Friday, President Trump announced that he will be imposing a 10% tariff on all countries. On Saturday morning, President Donald Trump increased global tariffs to 15%. The president is enacting the new policy under Section 122 of the 1974 Trade Act, a provision that allows for tariffs of up to 15% for 150 days to address large and serious trade deficits. This has been your weekly recap for the week of February 16th through the 20th. Post in the comments what you will be watching for next week. I'm your host, Joe White, and until next time, remember to plan for how you act or act for how you plan. This video is for educational purposes only and does not constitute as financial advice. The host and guests may hold positions in stocks discussed. Opinions and strategies expressed are not recommendations. Please do your own due diligence and consult a licensed financial advisor before making any financial decisions.